Hey guys, this is my morning rundown. I am working today, so good luck trading. I'm still on the bearish side for these markets today. Yeah, we're getting a little bit of a short squeeze based out of Europe, and but Asia the Asian markets as a whole just got destroyed last night. China, their three main indices between 7 and 9% declines as expected. 10% I think is the circuit breaker, so they managed to keep it right underneath that circuit breaker. And I'm starting with my ZNs here, and I got the VWAP, the bright orange. That's my VWAP on the 1 hour, and this is something I try to use as a gauge early market hours. And we are right at that VWAP, rallying back into it for maybe a potential move to the upside. We do have now it's been a tested VPOC, so this is a resistance area for our bonds for potential further upside. So just keep that in mind. We do have a little bit of resistance here. So it's anybody's guess which way these bonds are going to go. But if you go out on my daily on these bonds, that was in my prior videos, I had mentioned that this is the one area that we have not on the monthly time frame actually tagged my potential upside. So just keep that in mind trading today, that I do think the bonds still have some more room to the upside. The yield curve is inverted, so anytime it gets inverted, it gets a little more treacherous to be pushing bonds to the upside. So just keep that in mind going forward here in your trading. But we'll see how the fear goes. And as far as the China goes, but let me show you what happened here in the Chinese markets. That's the weekly. Here, I'll put it on the 1 hour here so you can see. Basically, we opened and it just completely got destroyed right off the bat. This is even including a massive. They pumped in a bunch of liquidity into the overnight repo markets to try to help stabilize the markets, and they just came a hair's breadth away from the circuit breaker shutdown of the markets. So they managed to hold it above that, and it built out value all day right here at the lows of the session. So basically, buyers were absolutely shut down. Just completely and totally shut down in the Chinese markets. And that makes perfect sense that happening. So basically, we traded below the August 2019 we trade but we went below it and came right back into that and closed right at the lows of August of 2019. Found some responsive a short squeeze right here into the close, trying to support prices at these levels. And keep in mind, when you have moves like this, mega moves like this, they can reverse in a relatively short order. So just because things look really, really bad, that for most of us traders, that's opportunity to start initiating long positions. And keep this in mind too. Alibaba reports Thursday, and they are going to have a very strong quarter. The singles day numbers were just, I mean, I know singles days is basically it is actually the biggest retail holiday anywhere in the world, and it was humongous this year. And I think Alibaba they just completely are going to blow the numbers out here going into the earnings results, and to be net short the Chinese markets. I know the virus is a not major headline thing, and it's promoting a lot of fear. Well, that's actually the time you actually want to start looking to add up to the long side. So Alibaba, this is one that I'm really watching here. I think you're probably going to be opening around the $200 area today uh, on Alibaba. That's kind of what I'm thinking here. And if I were to be getting a trend line touchdown here, the 196 area, I would want to have some long positioning, in my opinion, to Alibaba, their earnings going into later this week. At least start building a position if you're going to hold into the earnings results. But yeah, I think this coming quarter you're going to have some weak numbers and stuff, but they are really going to have some very outstanding numbers from last quarter, which are being completely and totally because of the fear in the markets. They're just completely ignoring the fact that they had a really good fourth quarter last year. Okay, this is your KWEB. This is your Chinese Internet ETF. And basically, we've already given up all the primary trend. We're trading below the primary trend. And we're below the 50 SMA on the daily here. On this is you're dealing with your Alibaba, your JD.com, and your Baidu. And so basically, with that gap, we're probably going to be opening right down here on this trend line today. So just keep that in mind, exactly what's happening here. You know, the Shanghai Composites is telling us one thing, that buyers were just absolutely shut down today. But as a knowing that we're going to have a major internet company reporting later this week, I would be very hesitant to be pushing shorts even further going later on this week. Okay, so just keep that in mind here. On your trading. Now we're at 2019 lows on the Shanghai Composite. So really, the real value for the KWEB would be the 43.83 area. That's the yearly value. That should have been the yearly value for this year. So, if we could get some sort of move way down here, you would have to, going into Alibaba's numbers, you would have to consider taking a long positioning into that type of an event. So just keep that in mind as potential setups. We're definitely going to be testing. We've already tested this. This has already been a tested VPOC right here. So that one's really not valid at this point. But this one down here has not been tested yet. So logic would say that markets are probably going to push to that. And that's the best opportunity for a long positioning into Alibaba if we were to get that later on this week. Okay. Now on my grids, and like I had said in prior videos, if you guys want these grids, to share this with you, all I need is your email. Just put it at the bottom of the thing, and I'll send it to you. And or you can even join my Slack group if you want, and I can share it to you. You can; those things are already on the Slack group, so you can easily access them. But and I'm not trying to market anything, or if you want to, that's fine. That's up to you. But what we're doing right here, I generally use the 1 hour chart and the VWAP this time of the morning, and we're trading right at the VWAP and the 2020 open on the SPY. So basically, anybody who has bought in January, they just absolutely got their bell rung, and the SPYs break even for the year. So some things that I want you to really consider about here: the S&Ps handle about 60% of the order flow of all the markets, the stock market. Okay, and what's really been driving this market all the way up here, margin and covered calls. So basically, every little dip we got on this move up, they were loading up on covered calls and adding to their margin positions. Well, whenever the tone changes, where we're starting, like the past 3 weeks, we've broken the market maker move to the downside. Okay, and I think that's accurate. I'd have to double check, but yeah, I'm pretty sure the past 3 weeks we've broken to the downside. And with the change of tone, and now that our P&Ls for 2020 are flat or even losing at this point, this is something you got to be very concerned about, because margin is going to be coming out of these the S&Ps really heavy now. Anybody who's been major debt, buying SPY on debt, after such an amazing move in the markets, now all of a sudden their debt positions are all probably negative, for one thing, and uh, their P&Ls from the end of the year are at best break even. Okay, so they're coming into 2020 on the verge of giving back their 2019 gains. So this is something you got to be very concerned about. That margin is going to be start coming out of this market. That was a major driving force to the upside. And thank goodness the Qs are still positive on 2020, because when that happens, that's whenever things really start getting in trouble. As and we do have the Google reporting tonight, which could potentially be a driving force. But just keep that in mind. We're still well above the thing. But right down here also is our 50 SMA daily for the Qs. And that's actually where my target is, that the 50 SMA on the Qs is going to be support for a potential bounce. And if you do that logic, that's also giving up virtually all the profits for 2020. So that puts the same scenario on the Qs, that, as an investor, you don't want to be having a lot of margin and a lot of covered calls on the Qs, knowing that you're barely breaking even and you don't have any type of 2020 buffer. Right now, they've got a buffer. So anybody who bought back here, with their covered calls, they're still in the green. But once you give up that 2020 buffer, your P&Ls are all negative. You don't want to be giving up your 2019 gains, so you're taking those leverage positions off and potentially adding to the other end of the spectrum on the downside. So just keep that in mind on these trading, and that's exactly, I think, what's happening here in the rut. Here's your 2020 open way up here, and we are trending down away from the 2020 open. So this is actually turning quite a bit more bearish on the Russell. And oil's really having a major impact on the Russell here. So just keep that in mind, And I don't even really have any significant support till 1595. So that's another, 25 points lower before the next significant support level on the monthly, on the Russell. So in my opinion, there's, and that is potential backtesting the breakout top. Okay, so that would be the move, backtesting this consolidation top. That's not actually a bullish call for Russell to go long. I'm just saying that's the backtest, and I'm pretty sure that's where these markets are headed. Okay, my rundown on Google here. Had a really good earnings last time. Initially, we got a little dip, a selling dip. Even after we had a little pop and a selling dip. And because the markets had basically everybody was doing covered calls all the end of last year, Google kept going up with it. And then we had one analyst upgrade after another, along with Facebook, especially with Google, Facebook, and Amazon. They were given really solid guidance, higher guidance. Well, if Google's anything like Facebook, which they were both are kind of like an ad companies, Facebook, it had the growth issue. You have to really wonder, can Google really blow it out of the park here after such an impressive move here? Microsoft blew it out of the park, but they picked up this huge government contract that really put them over the top. So as an potential advertising company, do you really want to be pushing it to the upside here? I kind of think they're not going to. I think they're going to hover right here on the 21 SMA today. They don't really want to push price to the upside going into the numbers tonight. So that suggests to me that there's not really going to be a big bullish push in the markets today, especially since we've got the you got the indices trading at or below the VPOCs. Like right now we're marking below the 1 hour VPOC on the ES. and that's to start the day off right here. So, I'm just not seeing a major driving force to to the upside today, especially seeing as the Shanghai Composite built out value right near the lows of the session in the face of stimulus. So, you know, uh, we'll see what happens today, but I would be very hesitant to be pushing significant long positions. And I've been wrong before, but I do think we've got a major change of character in these markets that are being completely and totally understated. Okay, so and like I mentioned earlier, in the healthcare is just getting absolutely rocked here. And let me see here. Go out on our weekly, see where the yearly value is now on the IBB. That's the most speculative area of the healthcare, and we're still up here near the tops. Yeah, we haven't even tagged the 21 SMA on the uh, monthly. So monthly webs or the weekly webs. So we came off a close, but to me it looks like we got a major top in here on our biotechs, and they have a lot of exposure in Nasdaq and the Russell. They both have some biotech companies, but biotechs and healthcare really seem to be taking on the chin now. Today, Gilead might actually catch it. I think there's earnings this week, and they do have a drug they're introducing over in China to fight the virus. So that could be a driving force to the upside. Now let me check real low. It's 5 o'clock in the morning. Let's see what's trading so far this morning. Okay, here in the early morning session, wouldn't you know it, I talked about Gilead. It's got the highest volume so far this morning. Really nice pop in Gilead on the news that they're testing a drug trial to fight the virus in China. So you think about how many people over there, are in China, and this could be a major catalyst for Gilead to the upside today. So keep that one in mind. Apple reported that every store in China is shut down for Apple, not likely to reopen this week. So that is a negative for Apple. It looks like, and those are the major ones hitting so far. AMD is getting impacted. AMD really has probably got a lot more downside, in my opinion. And then, as I said, Facebook, I still see quite a bit more downside in Facebook too. So. But on the pre-market movers, so it looks like Apple, Tesla is one of the main ones too. It looks like Tesla's trading lower. It was trying to break out there Friday in the close, but they are bringing it in just a little bit this morning on that one. So it looks like on the NASDAQ 100, Micron's catching a bid. So that's a good sign for the but then you have AMD not getting a bid, so you got some mixed signals here on the semiconductors. Facebook's catching a bid. Microsoft had blowout earning quarter, so it's not surprising to see them up today. Tesla down, and then Amazon looks like the bids asked are spread so far. You can't make anything out of that. Okay, there's really the only thing that's happening on the Russell, that's immune therapeutics. I would say that they might be doing something for the virus as well. So keep that in mind. AIMT, that's also showing up on the pre-market movers on the TOS platform. So that's a major Russell mover. None of the others really. American Eagle's down. AMC Entertainment looks like it's down too. People aren't going to be going to the movies and stuff with virus scares and worries to hitting them and stuff. So let me just finish it off here. We'll look at the Apple chart real quick since it looks like it's pretty active. And like I had mentioned in my prior video, Apple had a lot of responsive buying there at the close. Or I was actually trying to go net long in Apple there Friday, and then but it's down lower because they announced they're shutting down all those stores. Let's see here. Yeah. See, it's just barely trying to. So you have the what date is that? 23rd, 28th. About the 28th, we hit a low on Apple, and we are testing it right here and right now on Apple. So let's keep that one in on your watch there. It looks like a potential broadening pattern, topping broadening pattern for Apple. I mean, they had a blowout quarter. Um, they're sitting there trying to guide even higher for next quarter. Really, how in the heck can they? I mean, they had one of the highest, if not the highest, one of the highest earnings quarters of any company ever in history, and they're trying to guide higher after the Christmas holiday season. I don't think so, and I think a lot of investors aren't buying into the hype that they're actually going to have a better quarter than what they just had. And so this is a really good time to start ringing the register on Apple, in my opinion. And if you go on your lower time frames here, it looks like they're trying to defend it here along with the markets, but this is just not one that I would personally want to be taking to the long side, um, you know, swing wise. I mean, it really had a great quarter and everything, but they got the exposure to China. Um, so I don't know here. Let's see here. Yeah, right here. This is where I was trying to buy in, and they just completely. I couldn't even get filled. So that's something to keep in mind if the markets were to catch a bid. You know, they're probably this area right here. There was buyers waiting to come in here. So a on our 15-minute chart here, it looks like that there's a really good chance that we're going to be testing that 50 SMA today on any type of responsive buying in the markets. And I'm not saying we're going to get that at all. So at any rate, I'll end right there. I don't really think there's going to be a lot of buying. I don't think the the uber bullish sentiment that happened last year is going to happen this year. Okay, I actually think we're actually pops should be shorted as margin starts pulling out of the SPY. So that's my theme that going forward here. That I think margin trades are going to be pulled off on the SPY to the upside. So just keep that in mind, and I will see you guys tomorrow. Thanks.